we're going to talk about benefits, and we're going to do it in a different kind of way from anything I've done before. It's going to be kind of firing line style. So let's get to it right now. Hi there, I'm Andrea Adams, and I'm the host of HR Shop Talk. On the show, you get expert insight into all elements of HR. I encourage you to subscribe to the show by clicking on the button at the bottom of the screen, or subscribe to the podcast to keep learning from my smart and experienced guests. Today, my guest for this experiment is Shannon Hughes. Shannon is a benefits advisor who works with employers to figure out what benefits are going to work for them and their employees. She's been doing this for 15 years. Hi, Shannon, how are you?
Hi, I'm great. How are you?
I'm good. So we are going to do something different today, and we're going to go through all the benefits that an employer can purchase through an insurer.
So the insurance companies all started, well, not all, but the big three have been around for over 100 years, and they started as life insurance companies. So life insurance is the first component that almost all benefit plans, that's a mandatory part, the component that has to be part of the benefit plan. The life insurance on a benefit plan is challenging for the reason that it's never really meant to cover any one person's full needs because there's such diverse needs throughout an organization, right? So obviously the single person with no dependents isn't going to need much life insurance, but someone, a family with a mortgage is going to need a lot more coverage, right? So the life insurance on a group plan kind of just really is a placeholder and scratches the surface. And the way that that can be, some of the variations for that benefit, you can have a flat amount as low as $10,000 all the way up to, as far as a flat amount, it wouldn't generally go higher than a couple $100,000, or it can be based on your annual earnings and multiples of your annual earnings. So 1, 2, or 3 times your annual earnings.
Life insurance, this is only if an employee dies.
Correct. So in that case, the employee designates a beneficiary. So they choose who they want to receive the proceeds in the event of their death. And it's in the event of the employee passing away.
So we talked about life insurance. Check. 1. What's next?
Well, accidental death and dismemberment insurance goes along with the life insurance, and the plan design, it just mirrors whatever the life insurance is. So if it's $50,000 life insurance, it would be $50,000 AD&D, and that benefit kicks in the event that the death is accidental, and it doubles the life insurance amount, essentially.
Is it only in the event of a death? No, it can't be.
No, because that's where the dismemberment part comes in. So there's a whole schedule of like gruesome part, variations of limbs you could lose, or fingers and toes and all that kind of stuff. And so then it pays out based on that schedule if you suffer dismemberment as well, or paralysis.
Okay. So after life insurance and accidental death AD&D, what is next?
The next bucket I would say would be critical illness. Actually backing up, like speaking of the buckets, the benefits are kind of divided into 2 buckets. The first would be for financial protection, and that would include the life and AD&D. It includes critical illness, and then the disability insurance would be included in that. Okay. And then the other category would be really just protecting an employee's physical, like I said, physical and emotional well-being, and that would be the health and dental benefits. Yeah. So in the bucket of financial protection, critical illness, would come into play. And that's a benefit that covers that. One of the variations is you can select how many critical illnesses you'd like to cover. Okay. The most inexpensive way to buy that would be with the less number of covered conditions. Yeah. So that would be 4 covered conditions, and the standard ones are heart attack, stroke, and cancer. And you can go all the way up to 25 covered conditions. Yeah. And the nice thing with that benefit, it's a lump sum tax-free benefit that pays out after the employee has survived the waiting period. So there's a 30-day survival period. which sounds a bit gruesome, but then the employee has to survive in order to claim that benefit. And then, when you're dealing with sickness, there's a lot of additional expenses that you incur. You could maybe need to make modifications to your home, or if you're hospitalized, your family needs to be parking at the hospital or accommodations to stay near the hospital, things like that. So there are no restrictions on what that benefit can be used to cover. So it can even just top up a loss of income for an employee as well. So.
Then we talk about disability, short and long term, I presume.
Yeah, that's right. So short-term disability, not as common. It's quite an expensive benefit. And both short and long-term disability are often employee paid. And that's because of a CRA rule that if the employer pays any portion of the premium, then the benefit automatically becomes a taxable benefit. Mm-hmm. So to get around that, it's usually employee paid. So the nice thing with short-term disability, it covers hospitalization, covers, if you're admitted for surgery, you'd be able to make a short-term disability claim. It generally has a benefit duration of up to 4 months mm-hmm. to coincide with the waiting period for long-term disability. Mm-hmm. So most common plan design for short-term disability is that you get that benefit, a percentage of your weekly earnings for up to 4 months.
You say the premium for short-term disability is often employee paid. Are employees given a choice in this? And I mean, if they're going to pay for a benefit, usually they're going to want to have a say in whether or not they pay for it. And in the short term, when you're well, they might not want to.
Mm-hmm. That's one of the challenges is in an employer-sponsored benefit plan that it has cost sharing with the employees, and it's a condition of their employment. It is tricky because if you've got 100 employees, you can't. It's not necessarily great leadership to take a vote on it, or it's challenging. So I think that's the job of the advisor, is to make sure employees are really educated in what they're paying for, so you can get that buy-in. Yeah. Because we all believe we're not going to need any disability coverage, right? But I was actually just reading something today that I can't remember, just roughly at age 30, you have a 37% chance of being disabled more than 90 days at some point. And by age 40, that goes up to 50%. This short-term disability doesn't only cover workplace illnesses or injuries, it covers any illness or injury. So, living in Calgary, how many people do we know have slipped on the ice and had an injury and had to be off work, right? Or there's so many things that could happen.
Okay. Moving on to long-term disability,
Mm-hmm.
what is it? What's the variation, and what should employers know, or people practicing HR?
Well, what it is like arguably the most important benefit that you can have access to in a group benefit plan. Mm-hmm. And it's the least sexy, and people our nature is to believe that that's not going to happen to us and we won't need that benefit. But it can be income replacement for an employee all the way up to age 65, depending on the plan design. So that's significant, and really can't be understated or overstated how important that is, right? So as far as variations, I already mentioned it could pay up to age 65, but an employer could choose different benefit periods. You could also choose a 5-year period or a 2-year period. Mm-hmm. And obviously, as you reduce the period that the benefit would pay, it lowers the cost of the benefit. Mm-hmm. And the reality is that the majority of long-term disability cases are resolved around that 2-year mark. So, a 2-year benefit is still meaningful to employees to give them income replacement for that time.
If this was useful, subscribe to see all the episodes and talk to us. What questions do you have about benefits? Let us know in the comment section below. And so I think we made it through bucket number 1, the financial stuff. So now we're moving on to the bucket number 2, the physical and mental health stuff. What is in that bucket?
Well, that's the health and dental and the healthcare spending account. So the financial bucket is the benefits we hope won't be used, right? Because they're pretty catastrophic. Health and dental, we know are going to be used. So the health insurance includes a number of elements, prescription drugs. The other healthcare includes medical services and supplies, which are things like diabetic glucose monitoring pumps, CPAP machines. There's coverage for ambulance. So that's a very robust category. Another area of coverage on a health plan is emergency out of country coverage. That's a really important one. I think a lot of people that I talk to don't even realize that that is a component of their healthcare plan. But it's a really important one because that travel insurance is quite costly. It doesn't include trip cancellation or lost luggage or those kind of elements of travel insurance, but it's the really expensive medical coverage that's included on the group plan.
Right.
And then vision. Vision is probably included on the benefit plan 50% of the time, I would say. It's quite costly to add, and in general, only 50% of the people will ever claim it because only 50% of us wear glasses, right? So, but employees do attach a lot of value to the vision coverage when they have it.
Where does things like physio and acupuncture and chiropractic and all that fit in?
Right. So the last bucket would be paramedical practitioners, which I was just going to do a recap and see if I forgot anything. So the paramedical practitioners, again, probably one of the highest valued benefits that an employer can offer to their employees. And they're great because they give an employee the ability to proactively take care of their health, right? So going to the chiropractor, going to the physiotherapist, massage therapy, psychology, which is still very rarely used on a group plan. In my experience, it almost never even shows up on the data that we look at. So that coverage for paramedical practitioners, that can be one of the biggest cost drivers on a benefit plan. So when we're looking at increasing costs, prescription drugs is one big category, but the parameds are also big cost drivers because that insurance component isn't really there. Insurance is meant to cover unexpected things. Your regularly scheduled appointment with your chiropractor or your masseuse is an anticipated expense, right? So
I find that, and this is from both, I suppose, an administrative perspective and from an employee perspective, that knowing what's covered under your health plan, I mean, it's hard. There's a million categories and percentages of this kind of coverage and that kind of coverage. Is there any way to simplify that?
Well, I spend my day trying. That's a big part of my role as an advisor, because I always tell my clients that if they're paying for a benefit plan as an employer that their employee doesn't know about, then they're just flushing that money down the toilet, right? So it is really important that the employees understand what they're covered for and how to access it. So I think like staying away from jargon is really important when we're communicating about the benefit plan. I create a benefits at a glance for clients that just covers off on the most commonly claimed things or commonly asked about things. Doing employee education sessions and encouraging employees to review their benefit booklet as well and educate themselves, especially if they're paying a portion of the premium. You want to take a drip approach and just keep, providing employees with a little bit of information here and there about what they're covered for, and eventually they'll get the message, right?
So what's a health spending account?
Well, a health spending account gives a ton of flexibility to an employee. It's basically just a bucket of tax-free money or an account of tax-free money that the employee can access, and they can choose what they want to spend it on. So it's mandated by Canada Revenue Agency. And so in order to keep it non-taxable, there's a prescribed list of what's eligible to be claimed through it. And basically it's anything that you could claim on your taxes or through the Income Tax Act as an eligible medical expense can be claimed through the health spending account. So really the most commonly claimed things are any health care or dental care expenses that aren't fully covered by the benefit plan. The remainder can go through the healthcare spending account. If benefit plan is set up with no vision care, then glasses can go through the health spending account.
Okay, so I have heard of health spending accounts that are taxable. You
Yeah.
can charge over your gym pass.
Yeah, so that's called a taxable spending account or a wellness account. And CRA has nothing to do with that. It's basically just taxable income to the employees. So whatever they claim through that account is added to their T4 at the end of the year. And that gives a lot of flexibility. In my time, I've seen some really funny things go through the wellness account. I've seen one energy company that I used to work with. They had employees claiming guns and ammunition through there for hunting, like hunting rifles and ammunition. And they had to decide if they were okay with that. And I think at the end of the day, they decided if that's those employees' version of wellness, then that's okay. It's not up to them to dictate. But some organizations like to really put a tight restriction on what can go through that wellness account. Just really depends on the philosophy of the plan sponsor or the employer.
So those are all the benefits I can think of. Is there any more that I've missed?
Yes. So the Employee and Family Assistance Program.
Of course.
Yeah. So I should have tacked that onto healthcare, but yeah, that's something that obviously during the pandemic, a lot of organizations that before said, "Oh, we probably don't need this," have been more interested in looking into it. And basically, the biggest advantage or the biggest offering through that program is counseling services. And it does have so much more to offer, but that's what it's best known for. And those are great programs because we talked about the paramedical coverage, maybe being $300 a year or $500 a year of coverage per practitioner is a common plan design. Well, a psychologist costs $200 an hour, right? So that's not going to get an employee very far. So an employee and family assistance plan can be a really great tool to provide additional counseling to an employee. It's generally short-term solution-focused counseling. But sadly, the employee assistance plans are, in my opinion, really underutilized. And actually, the use during the pandemic even went down further when it should have been going the other direction. For employees that have access to a plan, like the average is 7 to 9% of them are using the employee assistance plan. So there's a lot of opportunity for promoting those and offering more resources to employees.
Are EFAPs expensive?
No, they generally cost depends on the type that you want or how comprehensive you want it. So between $3 and $7 per employee per month. So in the whole scheme of things, if that's a really meaningful tool to, promote mental health and enhance engagement and productivity, that's cheap, right? So, so no, they're not really expensive.
Thanks, Shannon. That was helpful. I hope you all found it helpful as well. I did an episode on the role of a benefits consultant, and that link is right here. Thanks for watching, and see you next time.